TMGM is my online trading platform of choice. I look forward to partnering with them. TMGM, I mean.
Hello, everyone. If you hear me, if you hear myself, can you please press one into the chat box? Yeah, we're waiting for more attendees into our Zoom. So, welcome you all to our exclusive webinar of TMGM and our speaker and Kar Yong. So, we will wait for like a minute to get more attendees into our Zoom.
TMGM is my online trading platform of choice. I look forward to partnering with them. TMGM, I mean.
Good evening, everyone. Welcome to our exclusive webinar, Navigating Market Volatility Strategies for Profiting in Turbulent Times, sponsored by TMGM. Then we understand that the constant ups and downs for the market can be exhausting for you guys. So it's a landscape filled with opportunities, but also with challenges. Today we're inviting a famous speaker, Kar Yong. He has 12 years of trading experience and is the 2022 WikiFX most popular FX trainer in APAC. Our speaker will share proven strategies to help you capitalize on market fluctuations, mitigate risk, and build a robust investment portfolio. So let's make the most of this time together. I encourage you guys to engage with our speakers, ask questions, and share your experiences. So, a round of applause for our speaker, Mr. Kar Yong. Welcome.
Right, good evening, everyone. So welcome to today's webinar. My name is Kar Yong. I'll just skip through the introduction. I'll just jump straight into today's content. Anyway, for those of you who are fairly new to me, I'm pretty active on YouTube and social media, right? So just do a quick search. You'll be able to find my profile and of course engage and follow with me in terms of all the contents that I share online. Okay, so as we dive into today's session over here, just want to do a couple of housekeeping. So first thing here, of course, is a disclaimer that the content that I'm personally sharing over here is based on my point of view, my experience. They do not directly, obviously, translate to any sort of financial investment advice. Okay, and of course, do as the organizers mentioned, do make full use of today's session. There is that question and tap feature on Zoom. Okay, so I would strongly encourage that if you have any questions throughout the session, just put it in. Uh, I may not be able to answer a question immediately, but we do have some time for Q&A, right? So just to prevent you forgetting the questions that you may have, whenever you have something, just put it in first. Okay, good. So with that, I'll start off the session over here by introducing to you guys the DSC framework. Okay, so this is one of the strategy, and I wouldn't say strategies, I would say more of an overarching framework because strategy is kind of a subset within this framework itself. So I want to introduce to you the DSC framework because I personally believe that, again, it doesn't matter what methodology you use in the market, how the market is performing, whether it's a bullish market, bearish market, or whatever instruments that you are trading, whatever strategy that you're using, the framework itself gives you the clarity in approaching the market. Okay, so what exactly is DSC? Okay, so DSC is basically the three core components of a profitable trade. Now, in other words, today, if you want to take a trade and have a high probability of winning, you need to have these three elements in place to help you navigate the market itself, right? To gain that confidence, that conviction in taking a trade. So the first core element is direction, right? Which is the D part within this framework. Okay, and I think direction here is pretty much common sense to a lot of traders. That's the first thing that a trader essentially need to, have a method to identify which direction, right? Whether to buy or sell. Is the market likely going to go up or down? Okay. So when we talk about direction, there are a couple of things that we can look into, right? We can utilize the fundamental approach. We can understand the macro perspective of the market. We can go into the technical elements of it, looking at charts, using indicators. And of course, we can go even shorter term, like understanding the market sentiment. Okay, when there's a piece of information, a news that's being released, how would this impact the market? Is it going to be bullish? Is it going to be bearish? That is going to drive the direction of market as well. Okay, so again, it doesn't matter which instrument you're looking at, right? Doesn't matter what time frame you're looking at as well. Establishing a direction is very important to a trader. Okay, and there are so many methods out there. Today I'll be sharing with you one of the more effective one that I'm personally using to identify my directional bias. Sometimes traders will then ask, okay, right now, if I'm interested in buying, how do I get in? Where do I get in, and where do I get out? Okay, so direction itself is not enough, right? Because if today you have a clear direction, but you don't know when and which price to get in and out, then you can't manage your risk as well, right? You don't, okay, framework, which is the setup itself. Okay, so setup over here, again, it encompasses the strategy of the markets. How are you going to execute a trade, right? What techniques, what strategy you're going to use to trade. Okay, so again, strategy here can be many ways, right? You can be using a combination of trading the news, fundamental perspective, plus the technical. It can be based on naked chart, price action. It can be based on a combination of different indicator base, you know. So strategy itself is really, really broad, okay? But that's something that you need to establish too, right? Today, I'm going to share with you again a setup that I'm personally using. But of course, that's one of it, right? It doesn't mean that that's the only setup that, you know, will be profitable. There are many other different strategies out there as well. Okay, and then of course, in setup here, we also talk about sessions, right? If you're more of a shorter term trader, sessions becomes very, very sensitive. Okay, if you are more of an intraday, then of course, trading the FX market, you need to know what happens during the Asia session, what happens during the London, what happens during the US, right? And of course, if you're trading the equities and the stock market, then obviously you'll be focusing on the US session itself. Okay, so sessions are important depending on your horizon. Okay, and of course we also talk about seasonality over here. If today you are trading US equities, some commodities, then of course seasonality play a pretty crucial role, right? Because that helps to tell you which month, okay, timing wise, you know, which month is good to be looking at it, which month you want to be avoiding it. Okay, so setup is really all about timing. Okay, and then the last part of this framework here is about context, right? It's like, yes, we get a direction, yes, we get a setup, but are we going to be super confident in it? How confident, how convicted are we on this particular trade? That's where the context comes in and play a part. Okay, we talk about confidence with our viewpoint. Is there more than one thing that can support the setup that we want? Right. We also talk about time frame alignment, right? In terms of like if today you're looking at a daily chart for a broader view perspective, and then maybe you're executing trade on the H4 or even the H1, are all this time frame and different perspective kind of in full alignment on the trade? Okay, so of course, if it's a full alignment, then you have more conviction to that, right? But if you don't get a full alignment, doesn't mean you can't trade it, but you have that perspective of, all right, maybe I'm taking a short-term trade, I'm taking the retracement trade in view of a larger trend. Okay, so context give you that clarity in your trades. And of course, we talk a lot about risk management as well, which is the RR ratio, risk to reward ratio, right? So every time I take a trade, I want to make sure that the potential reward is always more than the risk that I'm willing to put in. Okay, because if today I'm putting in, for example, $100 risk, and I only can potentially make back a $50 profit, that particular trade may not be worthwhile for me to even consider, right? And why I want to share with you this is because, you know, I feel that this is really a universal framework that you can plug and play in any asset, in any time frame. Doesn't matter what strategy eventually you're going to be using for yourself. As long as when you approach trading, you know, you have a method to determine your directional bias, you have a method to decide when to get in, when to get out. You have a method to help you establish your confluences, your contacts, your risk aspect. Then that's a profitable framework to trade the markets, right? That's where I want to give you that clarity in today's session, right? So of course, with that, I also want to give you some actionable stuff, right? Which is basically when we talk about direction, right? How do we establish it? Okay, so this is where I'm going to dive into the details of the method I'm using. Okay, we're gonna break it into two parts. So the first part here, I'm gonna share with you how I established intermediate interim break, where the organizer will share a little bit of information to you, and then I'll come back again, you know, 5 minutes later to talk about the setups. Okay, so again, reminder, if you have any questions, feel free to put it into Q&A tab first. We'll be having the questions and answers segment at the end. Okay, so when we talk about direction, okay, for me, there are primarily two methods that I use to establish, right? One, of course, is more of the bigger picture perspective. We look at the fundamentals, we look at the macro angle. Okay. I traded a lot of FX, right? So what do I consider as fundamental macro? Okay. To put things very simply, we look at central banks, right? If today the central bank is hiking rates, fundamentally the currency would strengthen. If the bank is moving towards cutting rates, then of course fundamentally the currency would weaken. Okay, so if you put that into perspective and what is happening right now, you do see that the Bank of Japan is actually hiking rates. They are in a tightening cycle. The yen is strengthening overall. Okay, and then of course you look at others. For example, the Fed, we're moving towards cutting rates, and you start to see the dollar weakening. Okay, so that's a little bit on the fundamentals. Okay, now it doesn't need to be overcomplicated, right? Give you a broad background info in terms of where the longer term fundamental direction is. Now, for me, I focus a lot on technicals. Okay, the fundamental give me the backdrop, but when I make trading decision, I always fall back to the technicals because I'm more of a shorter to swing kind of trader. Okay, there are a lot of methods. You can look at price action, you can look at chart patterns, you can look at indicators, you can do a combination of sort. So for me, the methods I'm sharing over here with you guys stems from the principles of Elliott wave itself. Okay, so in Elliott wave, we have this two term you can see on the screen. Okay, we have what we call impulse move as well as a corrective move or correction. Right. I like to break things down simply so that you can actually understand it and apply it after today's session. Okay, a lot of share with you. Oh, you need to understand, multiple patterns. Okay, and you essentially will be applying. Okay, of course, the more you know, the better it is. But at the end of the day, you only need two. Okay, why? Because one is basically, one pattern is basically a continuation pattern. Okay, let me just reply a quick message over here. Okay. So one is a continuation pattern, right? Essentially what that means is that the market would likely, very high probability, continue with the prevailing trend, right? And then the reversal pattern is actually telling us that, all right, the trend may be ending. You want to be careful in trading in that particular direction. Okay, so you just need two, right? One, you follow it, and then the other pattern is actually just telling you, be careful, the trend may be ending. Don't be too aggressive in trading in a particular direction. Okay, so what we need now here is then to understand, right? What is a continuation pattern? What is a reversal pattern? Okay, I'm going to show you how it looks like, right? A continuation pattern is built up from an impulse then correction combination. Okay, so what's an impulse move? Okay, let me just find my mouse cursor over here. Okay, let me annotate a little bit, right? Hopefully this works. Okay, so what's an impulse? Market actually move up very fast. And here as well, it came down very fast, right? It carries a lot of momentum. That's what we call an impulse move. Now, a correction is basically a slow moving development, right? Where you can see the market here. As it comes down, it goes up, it comes down, it goes down, it goes up, it goes down again. A lot of up and down. Okay, that's a correction. Here as well, up, down, up, down, up. Okay, so that's a correction. Now, when you get a specific, you can see this up impulse coming down correction. It comes down slowly. It tells us that there's a very continue in its Okay, so there's about 70% probability that would happen. Okay, now if you look at the opposite side of things, if you get an impulsive drop followed by a corrective pullback, market would continue to the downside. Okay, so let me clean up the drawing. Okay, now let me show you some examples of these patterns that has developed in the past so you can see how they look like. Okay, so over here you can see the first move up is strong. That's momentum. That's an impulse move. The market came down correctively, right? It doesn't come down very fast. It does a variation that we're familiar with. Okay, so you can see over here, impulse correction. We expect what? The market to continue going higher. And that's what exactly it did. Impulse move to the upside, followed by corrections, and then another impulsive move to the upside. Okay, so this is kind of like the pattern has developed in the past, and we're basically studying the probability of whenever we see something like that, how can we study the charts? How can we study the patterns, right? So over here, patterns, essentially, we are looking out for something that repeats itself over and over again, and it tends to give us some sort of a reliability factor, right? So that direction is kind of like the same, continuing its downside, does a little bit of pullback, continue to the downside, does a little bit of pullback, continue to the downside, okay? Now, what does this mean, right? It means that looking forward, moving forward, if we are going to see an impulse then correction combination in the markets, again, doesn't matter what time frame, it can indicate to us that there's a very high probability it will be a trend continuation, right? So as traders, what we are doing here is we're studying the historical pattern, identify how they tend to repeat with certain odds, and then when in the future we see something similar, we're able to capitalize. Here you can see that this pattern is really not unique, right? What do we have over here? We have our first impulse move to the upside, and then the market starts to pull back correctively, right? So when we see something like that, it establishes what we call a directional bias. Okay, we have an idea in terms of like which direction would the market likely be heading towards, and therefore we can focus on that particular direction. It doesn't mean that immediately you're going to jump in and trade, but it gives you a focus, right? We call this directional bias. So when you see something like that, obviously the directional bias is going to be bullish, right? If you ask me, I wouldn't be interested in buying. Okay, so that's what I call a directional bias. You have a focus to know which direction you want to be trading. Okay, and that's what happened in the market, right? Moving forward, right? So very, very high probability patterns over here. Same thing here. If you flip it, okay, if you look at something like that that's developing in the market, we have an impulse correction, right? We have a momentum drop. Then the market starts to pull back slowly. Okay, so this kind of gives us a clear sense of the direction. I'll be only focusing on sell. Okay, and of course, this is what happens moving forward. Probability patterns that tell us whether the market will likely continue or not. Now, obviously, when you open up a chart, it doesn't always be the case where you're going to see an impulse correction, right? Sometimes you don't see certain patterns. Sometimes you see some other patterns. It's common, right? But your role, again, is not to trade everything. Your role is to identify when opportunity starts to be clear. Which means if you open up a chart, you don't see an impulse correction, you don't put too much emphasis on it, you don't. So keep things simple. Now, obviously, if the market is not likely going to continue, then there's a good chance it will probably reverse. Okay, so you also want to add this pattern into your library. Okay? We call this an impulse crawl. Okay, give it a slightly different name, just to differentiate what's a correction and what's okay. Let me again annotate this a little bit. Okay, why is this a crawl? Because the market initially moved out with momentum, And then after that, it continues to go higher, but it's struggling to hit higher. So we call that a crawl, okay? So when we have something like that, the market tends to reverse because there's a lack of energy. Same thing here, it comes down, and then after that, it develops a crawl, okay? So again, this tells us there's a high chance the market would reverse, okay? So every time we see a pattern combination that looks something like that, which is an impulse crawl, we don't want to trade in its direction anymore. Our directional bias will be careful, it's likely going to reverse. Okay, let me show you some examples. Okay, now this one here is a good example of how the market develops a crawl. After that, it immediately developed into an impulse correction, right? So you can see on the left, right? The market move out very fast, strong momentum, and then it starts to develop into a crawl. It reverses with momentum, and then it does a correction, and then it continues in its trend, okay? So again, these are things that happen already, so we are basically studying it, okay? So that we know in the future, if we see something similar, how we can prepare, okay? So this is another example, right? The market is coming down, but you can start to see that as it comes down, it struggled, right? It bounced up, down, up, down, up, down. It doesn't go down with momentum, okay? And then at some point in time, it does a reversal impulsively, followed by correction, and market just continues moving higher. Okay, so I just want you to recognize the pattern. Impulse crawl, impulse correction. Now, if you look at this chart, right? So what's the application of it? If today you open a chart and this is what you see, you want to always ask yourself, how is the price developing? Okay, is it going to be developing fast or is it developing slowly? When it's developing slowly, then you start to realize, okay, previously it was fast, then slow. Seems like this is a crawl. It's coming down, but it's slowing down a lot. Be careful, right? You do not want to be selling into this chart anymore. You want to focus on the buy side of things, right? Because there's high probability the market will reverse, okay? So again, it doesn't mean you're going to buy it now. It's just telling you you're going to focus on upside, right? And that's how the market react, okay? Flip it, the other direction is the same thing, right? You open a chart, you look at it, ask yourself, is there a clear pattern that you recognize? How is the price developing? Fast or slow, right? So in this case here, you can see it's going up very, very slow. Previously, it was an impulse, right? So when you see something like that, you don't want to be buying into this chart. Okay, your directional bias is going to be bearish. You want to focus on sell only. You don't want to be buying it. Okay, and that's how the market develops here. Okay, so very, very clear and simple patterns. Again, not all charts you're going to be able to identify them, but your role as a trader is to look out for charts that gives you share with you, just some simple charts here to illustrate the pattern. Okay, give me a while. I'm loading up on TradingView. I see a question here as well. Let me maybe just answer your question a little bit, right? So someone asked, how do we know whether it's moving slow? Okay. Now slow moving essentially is a relative thing, right? So let me share with you the screen over here. Cool. Sorry, I might just need to open up a blank chart so that my existing analysis would not complicate stuff. Okay. Good. Okay, I don't want to use the yen pairs because I think the yen is just not gonna be. Okay, we're gonna use this. Okay, again, doesn't matter instrument. Basically, we're talking about chart pattern first. Okay, so what is fast, what is slow, right? So if you look at this, right, this is where the current market price is. Okay, you do a comparison. Okay, sometimes things can be very, very clear. Don't overcomplicate it. this development, the market is going up, right? I mean, the market price is here. It came from this low, it went up. The question you naturally ask yourself is, how did it move up? Is it fast or slow? How do you know? You look at a comparison, right? Previously, the market came down. That's a very obvious momentum push, right? So if that's going to be fast, this move up relatively, it's slower, okay? So this starts to build up a combination of what? Impulse, correction. Cool. So what does this directional bias give us? Bearish bias, which means that this particular chart, I wouldn't be interested in buying. I'll be more interested in selling. Okay. Now, if you play around with multiple time frames, if I go down to the hourly, okay, you can start to also potentially see, right? How did the market develop from here? Okay. It's going up, slanting to the upside, but compared to the previous move, that seems slow. So what pattern do you have? You have a crawl, okay? So again, going back, playing around with multi-time frames, you can see if this is going to be a crawl, what is the bias? Bearish. If this is going to be a correction, what's the bias? Bearish, right? So you kind of have a little bit of an alignment over here, okay? Now, not every time if you go to like daily time frame, okay? And then if let's say you're looking at this, okay, it doesn't matter the time frame again, right? Just assume you open a chart and this is what you see. The market is here, it came from here, it went up. Then you start to look, okay, it doesn't really look like it's a very clear pattern. Okay, we have this down move, we have this up move, but like it's a very obvious pattern. When you face with something like that, just move on. Okay, because not all the time you open a chart, you're gonna get a very clear pattern, right? So some factors include what instruments you are looking at, what time frame you're looking at. Obviously, if you're looking at high time frame, you need to be a bit more developed, a little bit faster. So that's how you can look out for it. Okay. Let's just go to some other examples here, right? So let's talk about silver, right? Let's just jump into silver and say maybe on a lower time frame. Okay, you open up chart and then you look at things and say, all right, market is here. How did it came up? Seems like this push up is a little bit of a momentum. This was fast. This one here looks relatively about the same. So when things are not clear, what do? You do absolutely nothing. Okay. However, as the market continue to evolve, okay, let's do some forecasting, right? If the market starts to do a correction, then what do you have? You have a clear pattern that you can recognize. Fast move up, correction. What's the directional bias? Bullish. Okay. Now, if today the market doesn't do a correction, the market starts to crawl. What pattern do we have? We have an obvious pattern we can recognize. We expect this to come down. Can follow, right? So when things are not clear, sometimes you just need to be patient because at some point in time, the market will develop into a pattern that you can recognize. Okay. So that's something to know. Okay. Overcomplicate it first if you're fairly new to this principle. Focus on the fundamentals of things, right? The foundation of things, which is the impulse correction, impulse crawl, right? Focus on that, practice, be familiarized with it. I'm not telling you that that's the be it and all, right? What I'm covering with you guys here is the foundation, right? There are more layers that you want to eventually add on to that. But of course, you need to establish a very strong foundation before those things can, be stacked up. Okay. Very, very quickly, I see a question here as well. So crawl is in the same direction of the impulse. The answer is yes. Okay. Direction of impulse. Yes, right? So you're absolutely right on that. Okay. So hopefully that's clear. Good. So with that, very, very quickly, I'll pass the time back to the organizer first to do a quick 5-minute break. And then I'll come back again for the next segment on setup. Okay, so I'll pass the screen back to the organizer first.
Hello, everyone. Nice to talk with you again. And I'm from TMGM, and I would like to show you guys a full introduction about TMGM and what the promotion of tonight. So the promotion is only for the webinar attendees. So make sure you tune in and stay till the last minute to get to join in the promotion and win the premium prizes. So let me share with you my screen and the company's introduction. So I hope you guys see my screen and the PowerPoint slide of TMGM introduction. So everyone, you guys can type in one or anything in the chat box to prove that you have seen my slides. Yeah, great. Okay, thank you everyone. So speaking of TMGM, TMGM is leading provider and innovator in TFD trading, constantly pushing the boundaries through cutting edge research and development, and we proudly empower investors to take charge of the investment portfolio and combining lucrative CFD trading opportunities across 12,000 products, including forex, shares, precious metals, energies, and indices. Our clients are distributed across more than 200 regions, and we provide a lot of trading products for investors and institutional clients. And we have also 6 offices worldwide, including those in Australia and also in Cyprus and Thailand. And we're proud to announce that our trading volume month for monthly exceeds $359 billion. These are the milestones of TMGM throughout the years. From 2013, our group was founded in Sydney, Australia, and gaining the first certified financial services from ASIC. So throughout the years, we quite built a lot of milestones, a lot of achievements, cooperations, and for those who trade in the industry, for those who have the business in FX and trading, we also have a lot of support program and also the award and the prize we receive at the top global broker in FX. Yeah, you can see that throughout the years, we partner with a lot of partners all around the world. So this is the intelligence report from quarter 1 of 2024 and the data source from Finance Magnets. So our MT4 retail volumes ranked third globally, and the retail volumes of MT4 is at ranked sixth globally, and the monthly retail volumes reach as high as 359 billion US dollars. We also have yeah. So you guys can see that our clients, yeah, and other information of TMGM, our the location of our offices from worldwide in Australia and also in Cyprus and Thailand. Sorry for the slides haven't changed from the first slide. There's some error in connection. And then throughout the years, you can see the milestone of TMGM. We cooperate and collab with a lot of big partners in the industry and also outside of the industry. And we have reached top three global licenses of the finance sector from ASIC, VFSC, and FSC. Our investment projects have is a wide range of products to choose from forex metals, energies, indices, crypto, and also our other region stock like Hong Kong, Australia, US, Shanghai, Shenzhen, and UK. We provide our clients a lot of trading advantages, such as the trading center with the best market condition, with the best trading insights, and effective analyst feel. And we provide our traders with an environment with a low cost and a 24/7 customer service available for your help and offer your support. So this is our pride, our sponsorship throughout the years. First is the Chelsea Football Club and the Australian Open and the other football cup and also the Jeju Carnival Tour. With Chelsea Football Club, we have partnered with them for several years and have reached a lot of milestone, a lot of in agreements with them to boost our brands. And TMGM is proud to be their partner in a lot of regions. We also sponsor for Australian Open. We signed a multi-year sponsorship with Australian Open since 2021 edition. Yeah, as you can see, TMGM logo is all over the stadium of Australian Open. And also the AFF Mitsubishi Electric Cup in 2022. We also partner with the philanthropic event from Shafir Dinner in 2022 and 2023 to show our responsibility with the society. This is for the Great Barrier Reef Foundation to protect the marine life. So that is the way that we engage in social responsibilities and promote philanthropic development. So this is the most recent news of TMGM. We are excited to announce a multi-year extension with the partnership with Chelsea Football Club. And on the football field, the brilliance of the Blues never ceases. And also in the financial market, TMGM excellent service remains consistent. And on episode of today's promotion, this is a exclusive promotion for our attendees in this webinar. So once you join this webinar, you have the chance to join this lucky draw. So the premium prices is including the Chelsea Football Club exclusive T-shirt with TMGM. This is only available for TMGM and our clients, and also other prices like 500 US dollars cashback, 250 US dollar cashback, and also other prices. So how to join? You can deposit from 300 US dollars net deposit and you will earn one entry into the lucky draw. So for example, you deposit 300 US dollars and you earn one entry, and if you deposit 600 US dollars, you earn two entries, and so on. So the more you deposit, the higher chances you win the prizes. And after this session, I will send into the chat box the registration for the promotion link. And you can just click on that link to join the promotion. So thank you for your attendance. And from this, I will transfer the host into our speaker, Kar Yong.
All right, so let's get back into the second part of the session, right? So over here, I'll be covering the setup, okay? So obviously, just like I mentioned, after the direction itself, you need to also have a strategy to get involved in a trade, right? timing wise, and of course deciding like when to get it, what price to get it, right? So there are many different strategies, different setups. Over here we sharing with you one of it, which is basically called the order flow technique. Okay. So pardon the technical terms over here, in terms of like what is MSB, what is MSS. We just focus on the concept of things. Again, the terminology is something that you can really just change the name of it as long as you understand the principles and the concepts behind it. Okay. Overview of the strategy, right? What's the processes, what the steps of it? Okay. So in terms of order flow, the first thing here is of course to identify the market structure. Okay, now market structure over here is slightly different from the directional bias. Okay, directional bias, we did it just now. When we talk about market structure, it's really as simple as the principle of breaking highs or low, right? Is the market forming higher high, higher low, or the market is kind of like reversing, is breaking the previous swing low, or breaking the previous swing high, right? So when we talk about market structure direction, we're just talking about breaking highs and lows. Okay, if the markets are consistently breaking highs, we're in a bullish market structure. The market starts to break swing lows, then we are transiting into a bearish market structure, right? Just as simple as that. Now, once we have that, then the next thing is to identify the order block. Okay, so order block here refers to supply and demand. We're essentially entering trades near this order block. Personally, I also utilize Fibonacci ratios, and my stops and targets are basically just using the previous swing highs and lows, right? So if you look at this here, the entire setup is really not complex, right? It's pretty straightforward. But again, as I mentioned, this is the foundation, right? You want to add more stuff as you progress as a trader, right? So I give you a overview in terms of like how the setup, the bullish market structure, right? Now, what is a MSB, right? MSB basically just stands for market structure break, right? So that's the first step, right? You can see here the swing high has been broken. We formed the swing low. So the market is essentially in the bullish market structure. We identify the order block. We wait for the pullback. Our entry is at the order block. Our swing high. It's really that simple. Okay. Now, with that, okay, of course, you also have a bearish market structure model, right? Where the market is breaking lows. And then basically we just wait for a pullback. We enter the order block. We have our stops and targets in place, okay? So how do we identify order block, right? I think identifying the structure, if you have a little bit of knowledge about swing highs and swing, I think that itself, we talk about breaking highs and low, I think that's like really fundamental. Okay. So skip that and kind of cover in terms of like how do you identify order block? Okay, we use this principle called fair value gap, right? So what exactly is fair value gap? Is very, very simple, similar principle to the fair value gap is and tells us it moves in a strong momentum. Okay. So I give you some idea of it. Okay, and then we'll show you some charts. Okay? So fair value gaps are created when the market momentum is strong, right? So AKA that's your impulse move. Okay, so in equities and indices, they're generally your gaps, right? Literally, you would see gaps in equities and indices. Those are what we call fair value gap. However, if you're trading the FX market or you're trading the commodities in a 24-hour cycle, you won't have gaps as frequent. So we use a 3-candle pattern to identify fair value gap. Okay, so over here, this is a bullish example of a fair value gap. You can see between candle 1 and candle 3, they do not overlap. Okay, and candle 2 forms a huge body. So when the first candle and the third candle do not overlap, it creates a gap, right? And that's what we call a fair value gap. Now, how do we increase the obviousness of a gap of FVG? Is basically when candle 2 is a huge body, right? Which means that it carries big momentum. Okay, same thing here as it's coming down. You can see candle 1 and candle 3 do not overlap. It forms a fair value gap. Okay. So the idea of fair value gap is important because once you identify that, it kind of leaves behind clues that, and why do the market moves off with momentum? Because prior to that, we have an order block. Okay, we have the market coming in as demand or supply and pushes price strongly in a particular direction, and therefore it leaves behind value gap. Okay, so by that logic itself, okay, the first candle is often identified as a potential order block. Okay, why? Because before a strong momentum push, the market actually have participants stepping in to push prices, right? And that creates the order block. Okay, so I'll give you some examples on illustration over here, right? We have a fair value gap. The first candle often forms the demand zone because price is going up. That's your order block. That's a demand zone. Now, if the market is coming down, then we'll want to identify the order block as supply. Okay, so again, keeping things very, very simple. The idea here is to start out with a solid foundation. There are more, but this is the simplest one to start off with. Okay, you look at a 3-candle formation, you have a fair value gap. The first candle is where your order block starts. Okay, so if you put all this together into a setup, okay, this is where you get the market structure break. You have your swing low, you have your fair value gap, you have your first candle forming a demand zone, and then of course you have your swing. Our entry would be at the demand zone, our stop is, okay? So you still remember that whole process. Identify market structure, whether it's bullish or bearish. Identify your order block, which is basically using the concept of fair value gap. Our entry is at the order block. Our stop loss and take profits are basically at our swing highs and swing lows. Okay, and this example is a very nice case study where the price tagged the order block and then immediately bounce off, right? Now, obviously, not all trades are going to look so ideal. Not all trades are going to be perfect. But again, this gives you a objective way of approaching your trades, right? It becomes a setup that there's no guesswork behind, right? You establish a directional bias, you have a clear focus, then you go and look for your setup, right? Now, a lot of traders would make the mistake of immediately opening a chart and look for a setup. Okay, you don't want to do that because if you don't have a directional bias to support your setup, you're essentially trading blindly in a way. Okay, you want to first establish what is the overarching direction you want to be focusing on, whether is it short-term or long-term, and then you go and look for the setup to execute your trade. Okay, so there's a proper sequence to that. Right, this is another example, right? The market is coming down. We have a break of structure to the downside. We have a bearish market structure. We have our fair value gap. We have our supply zone. We have a swing high, swing low. The entry will be at the order block. The stop as a swing high. The target as a swing low. Very nice, perfect trade. On a particular chart over here. Okay. Now, obviously, this is not a trade signal for you guys to just take it, right? Because you need to have more layers to that. I'm really sharing with you. Give me a while. Okay. Okay, now it works. Okay. Now this again, I was saying this is not a trade signal. I'm sharing with you the foundation of it. I'm using an example in the real life market. But there are more elements you need to take note of, right? For example, there is a high impact news coming out tomorrow related to this particular currency. So those are some of the filters that you probably want to take note as well. Okay, so with all that said, okay, let me show you the Euro Canadian on the H4. I have a clear directional bias because I have this as an impulse leg. the market came up. We had a nice little bounce off the 618. I'm expecting this to come back down. Okay, at least towards this area here or this low here. That establishes my direction bias, right? So I always want to have a clear direction. What do I want to focus first? Okay, so in this case, I have a direction I can focus on. Okay, then what I do is I go down to the lower time frame and I start to look out for opportunities where I can have a setup. So I play around with multi-time frame. I look at it on the lower time frame on H1. And what do I see? Okay, so I have the market coming down, break of that previous swing low. We have a break of structure, which is a market, right? So that's the first thing in our setup. We have huge candle momentum, so that's a fair value gap. This area becomes my order block. Now, obviously, I add in another layer here, which is my Fibonacci. Okay, retracement of a swing high and swing low. You can see the 71% comes in very nicely where the order block is. That's what we call confluences. And the entry is essentially there, right? The stop is at swing high, the target is a swing low. Very, very simple setup, right? Now, does it mean it's gonna work out all the time? Is every trade gonna be a profitable one? No. But we have a objective way, a disciplined way of managing our risk, managing our trade. Now, the thing here is you can see this setup itself, the risk reward ratio is always going to be on average 1:2 minimum, right? Sometimes it go beyond 1:2. What does it mean? It means that if today I'm risking 1% on this trade, I can potentially make back 2 times, which is great, right? Because if I'm going to take 2 trades, 1 win, 1 lose, meaning 1 hit my stop, 1 hit my target, I'm going to be net profitable because of my risk to reward ratio. Okay, just giving you another one that I'm also in right now is actually BTC. Okay, you can see very similar setup over here, right? The direction is done, so this is basically just showing you the setup. We have this move up, breaking that swing high. We have impulsive leg here, so that forms your order block. Okay, we take Fib, align with the order block. That's the entry, right? Now, whether this trade will play out and hit the target or not, I won't know now. But that's the setup, right? You can see the repetitiveness of it. Okay, so the process I cover with you guys: look for market structure, identify your order block. Okay, if you want, you can add in your Fibonacci ratios over here for confluences. Your entry is around your order block. Your stop and target is basically at your swing high and swing low. Okay, so nothing too complex on all this. Okay, let me cover some opportunities that you can look out for in the market, right? So I don't look at a lot of things, right? Again, each week, if I have like 1 or 2 opportunities that I just want to focus on them. Okay, so if you take a look at dollar yen, okay, so right now dollar yen is kind of testing the 50 and 620 Fib. Today we did not talk about Fibonacci. That's another topic, obviously. But we talk about directional bias, right? So over here, I'm adding a little bit more of a additional layer of establishing my bias, right? I'm looking at it from an angle of Elliott wave principle. I'm expecting a 3-wave development, right? So we have this push up, the market came back. I'm expecting one more push. Okay, so I'm currently having a short-term bullish bias, right? Short-term, I'm expecting this to push up. So I'm interested in the buy side of things. Set up right now on dollar yen. The answer is no. Okay, I don't have, because the market is coming down, obviously. Okay, on the lower time frame, what would give me a buy? Probably give it some time where I want to see the market move up a little bit, maybe come back down a little bit, and a break of structure. Okay, then after which, if it pulls back into an order block, okay, you can see the necessary mean I'm going to buy it now. I need to have that setup for me to pull the trigger. Okay, and you need to be very clear of your setup. Okay, obviously, if it's new to you, right? You probably need some practice, but eventually you want to be very, very clear of your setup, right? Like before it happens, you need to have eyes how your setup looks like. And, other than that, if you ask me, for of course the BTC there as well. So far these are some of the trades I'm having in my watch list as of today, right? The market continue to develop. We'll need to then see how it develops tomorrow. Good. Okay. So I see some questions over here. I'll take some questions. So if you have any more questions, feel free to put it in. Generally, those are the two things I want to cover today: directional bias and the setup itself. Again, it's foundation of things, right? You really want to go and practice on that first. So I've seen a question here from Chan. Will you adjust to a positive SL, right? That means, will I do trailing stop? The answer is yes. Okay. For example, Bitcoin trade, it's already in profits, right? So I would shift my stops to break even. If it continues to go higher, I might do like partial profit take, trail my stop, etc. Right? So those are management on trades. It really depends on your own personal preference, right? So I do. Okay. Good. Have. All good. Okay. If all is good, I hope today's session give you an kind of like a holistic aspect of the DSC framework, as well as the foundation of how we establish the directional bias and the foundation of the setup that I'm personally using. As I mentioned, okay, it's the foundation, meaning there's something more advanced that you eventually still need to add on, right? But this is a very, very good kick. Are we gonna be having any wave session? We haven't really decided on that yet. Okay. But of course, if DeFi, maybe a subsequent part two of it, right? Going a little bit into the more advanced stuff and things like this. Okay. For the slides itself, I can pass it over. I think if you're registered, they will have your email, right? Maybe then they will just attach it to a follow-up email and then send it over to you guys. So if there's no other question, what I can do is I'll just maybe pass the screen and the time back to the organizer, maybe to just do a wrap up and um, yeah. So all the best back to you guys, and hopefully we'll see you guys in the next session as well.
So, Emilio, is that your part finishing now?
Yeah. So you can do a closing and then just wrap up the session.
Okay. So, everyone, it's just a friendly reminder for you guys to join the promotion of TMGM. So, I just pinged the message about how to join, the prices, and the promotion duration. So, make sure that you deposit within the duration of 19th August to 28th August 2024, and make sure you have the account with TMGM and just deposit, and our sales manager will contact you shortly to provide support on this. So thank you for tuning into our exclusive webinar with Mr. Kar Yong, and we hope to provide you with more useful webinar in the future. So let's stay tuned with TMGM and our update for future webinar. Thank you.